The markets continued higher today. The Dow hit an all-time record high. It did a gap up shooting star, so it tells you to be a little bit careful. But as of yet, there hasn't been any major change of investor sentiment. And through this whole uptrend, after coming out of the fry pan bottom, there hasn't been a close back below the T line. The NASDAQ also gapped up today through this level. Got to watch to make sure there isn't consolidation, but as of now, there is nothing that is showing that there's any major change of investor sentiment. The uptrend remains in a constant uptrend as long as they don't close it back below the T line. There's a lot of exuberance moving into specific areas. For example, our recommendation last week on Riot was based upon the pattern setting up, kind of a J-hook cup and handle. Today it was up big. At one time it was up over almost 40-50%. But the fact that it's still moving well above the T line and there's still buying going on, for the aggressive trader, using candlestick signals allows you to see what's exactly happening as far as investor sentiment and whether the profit taking has started yet. In this case, we're looking for still higher prices based upon positive trading going into tomorrow. Knowing that a specific sector is moving very well, stocks that are related to that sector, such as MARA, M-A-R-A, is another one that we've recommended for the aggressive trader based upon the wedge formation breaking out. Today they traded a positive, telling you there's a new dynamic that could make this a very strong price move. Essentially what the candlestick charts do is tells you what's happening in patterns that everybody else is watching, but tells you exactly what's going on in investor sentiment. As you can see, this final pullback is all a bunch of dojis, and today they gapped it up through that level. This tells you the indecision out here at the end of this wedge formation tells you now they've changed from that indecision. So candlestick analysis is merely the graphic analysis of what is occurring in a trend, what price patterns that everybody's expecting, and what is the actual result of investor sentiment. We recommended overstock last week because we could see the uptrending channel, we could see the pullback, the bullish engulfing signal right smack dab on the 50-day moving average, with stochastics in the oversold area, and then they gapped it up through the downward trending T-line, telling us we were more than likely back in an uptrend. And what usually occurs in these type of price moves? Well, if you know you have a trend and they've backed off, usually this move right here is very substantial and very quick to get you right back up into that trend. The reason we can recognize that this is likely to occur is based upon analyzing what type of signals are happening at a technical level, whether it's the 50-day moving average support or a gap through the T-line, to tell us the probabilities are pretty strong we're heading back up in this direction. This has been the function of candlestick analysis so now for the last 400 years, let alone just the last year. There's people that have not made money during this uptrend over the past 12 months. With candlestick analysis, it continually puts you in situations where the probabilities are greatly in your favor that you're going to be in the right trade at the right time. That'll be it. Hopefully we will see everybody making lots of money going into 2018. See you in the chat.